Hello everyone. Today we're going to talk about the tightening U.S. presidential contest and then review today's upcoming ADP report and U.S. oil inventories. I'll put out a separate video discussing today's FOMC meeting. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment. So with no major European economic indicators out today, I thought I'd give you my view on why the markets were so spooked overnight. Most people had thought the U.S. election was basically over. Even Trump himself seemed to be conceding that he would lose. But recent polls are showing a fall in support for Clinton and a resurgence in support for Trump. One poll, the ABC News Washington Post tracking poll conducted on October 27th to 30th, showed Trump with a 1 percentage point advantage over Clinton. Now, this was the first time Trump was leading in this poll since May. Clinton's been hurt by new revelations from the FBI yet again about her email problem, although nothing new concrete has yet to emerge from this. Never mind that the New York Times has been describing the many ways in which Trump has been avoiding paying taxes for decades, some of which are now illegal. And never mind the fact that 12 women have now accused him of groping them, and he's even being sued for molesting a child. 538.com, one of the most highly respected websites that aggregates polls and analyzes them, says that the probability of Clinton winning has fallen to 71%, from a high of 88% on October 17th. That's a pretty big drop. Meanwhile, Trump now has a 29% possibility of winning, which can't be ignored. Because of this, the price of Clinton on the Iowa electronic market has plummeted to 62 from a high of 93 on October 21st, while Trump has risen to 40 from a low of 10. The Iowa electronic market is basically an electronic betting market where the price is roughly equivalent to what people think the odds of something happening are. So with Trump gaining, risk aversion set in, and safe haven assets like gold, the Swiss franc, and the yen gained. On the other hand, risky assets such as stocks fell sharply. Now, this trend could continue for the next week or so until the election is over, so stay tuned. As for today's indicators, ahead of today's FOMC meeting, the November ADP employment report will be a key to whether they can indeed go ahead and hike rates in December. An ADP figure around what the market's expecting, 165,000, would qualify as what the FOMC calls further evidence of continued progress towards its objectives, and therefore would be positive for the dollar. The weekly Department of Energy oil inventory figures are expected to show a rise in inventories. That would be normal for this time of year. Over the last 5 years, inventories have risen 1.9 million barrels in the current week. However, as you can see from the graph, inventories are already 30% higher than average for the current week. So it's really unnecessary to see a further build. Nonetheless, last night's weekly figures from the American Petroleum Institute showed a huge 9.3 million barrel rise in inventories. So a 1.5 million barrel rise in the Department of Energy figures, which is what the market was forecasting, might be seen as lower than expected result and could even cause oil prices to rise. Now, for a view on the very important FOMC meeting taking place later today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.